Hi, everybody. Thanks for joining me. Before we get started, please take a minute to click subscribe to my channel to keep up with all of my latest investing and personal finance content. And please check out the link you see on your screen for a message from our sponsor, The Motley Fool. You can get the top 10 stocks you buy right now.
So, Tyler, you and I are heading to Omaha with a group of other fools in about a month, a little over a month, to check out Warren Buffett's Berkshire Hathaway annual meeting, also known as the Woodstock of capitalism. Tyler, it's your first time and you're in for a treat. I can tell you that right now. So, before we go, we are going to be doing a little bit of looking at Buffett's investments and Buffett's portfolio. And there are, with what's been going on the past couple weeks, I'm seeing some timely ideas. So, Tyler, what's a stock in Warren Buffett's portfolio that is really jumping out to you right now?
Well, one that I'm going to use this one almost as a proxy for other things that I own, but one that the ones that interest me a lot right now is the financial ratings companies, and in the Berkshire portfolio is Moody's, and the one I just happen to own is S&P Global. I don't have any issue with one or the other. I should probably own Moody's. I would probably, even if I had a chance to pitch Warren Buffett, I'd say, hey, why don't you just own S&P Global while you're at it? We're talking about two of the three default companies when we're talking about credit rating agencies, right? You would either you get your debt rated from S&P, you get it rated from Moody's, you get it rated from Fitch, or you go home. It's like nobody else is doing credit ratings outside of those big three. And if you want to be respected in the capital markets, you're going to have at least one of these companies rate your debt, probably two. With that sort of dynamic going on, it's just like it's a monopoly without being a monopoly. Sure, other people could do it, but nobody else is ever going to be able to really probably penetrate that market. Now, I get that there's a lot of other aspects of these businesses, and some of them are complementary, some of them are tangential. I know that you and I, with our trade, we talk a lot about like S&P Capital IQ, which is a huge data platform that S&P manages. Moody's has a lot of similar products and things like that. But at the core, these are rating agencies, and their job is to own data and how to rate companies. And because of that, yeah, sure, maybe if we head into a recessionary period where fewer people need to get debt rated or have credit ratings on their businesses, it might impact in the short term. But these companies aren't going anywhere. You're going to need your debt rated.
So one that I like in Buffett's portfolio is actually one that he's been selling a lot of lately, and that's US Bancorp. Ticker symbol is USB. It is a regional bank. I call it kind of a mega regional bank because it's in that space between the big banks and the regionals. US Bancorp is historically one of the best risk managers in the banking space. They have high lending standards. They keep good asset quality, and you pay for it. They've historically traded at a higher valuation than other banks, especially the big banks. Now, there's a few things to point out about US Bancorp that separates it from other regional banks. One, it has enough assets that it is considered systemically important. In other words, too big to fail. So it doesn't have this big uncertainty cloud hanging over it that a lot of the other regional banks you're seeing have. But it is still down big. It's down about 40% from its 52-week high. And this is the lowest price to book valuation you could buy this stock at, other than a little dip during the initial COVID crash, since the financial crisis. Management has done a great job of staying away from high-risk investments, embracing banking technology. They're going very digital right now. They have one of the better digital adoption rates in the whole banking space. And because they are not an investment bank, they're mostly just a savings and loan, they are a big beneficiary of rising interest rates in terms of their margins. So I think with a almost 6% dividend yield right now, almost 6% from US Bank, about 6 times forward earnings, and like I said, a low price to book ratio that you rarely see in this stock, I think Buffett might want to rethink selling this one. It seems like a very timely opportunity for long-term investors.
Once again, thank you so much for joining me. Be sure to click subscribe if you don't subscribe to my channel already. And as always, this video is sponsored by The Motley Fool. Be sure to visit www.fool.com/Frankel to receive the top 10 best stocks to buy now.